Welcome to the SWIB podcast, where members of the Wisconsin retirement system can turn for timely information on the investments that help fund the state's pension system. I'm Chris Preisler, communications specialist for the State of Wisconsin Investment Board, or SWIB.
And I'm Dusty Weiss, producer of the podcast.
When investing in the stock market, there's a list of companies that will be familiar to even novice investors. Apple, Microsoft, Alphabet, Amazon, and Walmart are just a few of the companies that grab the attention of investors and make headlines. These are large capitalization or large cap companies. These companies typically have a market capitalization over $15 billion. Although aggressive growth may be in the rearview mirror for these companies, they typically offer investors stability. But when building out a successful, diversified portfolio, investors cannot overlook small capitalization or small cap companies. These are companies that have a greater chance for growth and in some cases have the potential to become the next large cap stocks of the future. So what does SWIB's small cap portfolio look like? How does it fit into SWIB's investment strategy for the Wisconsin retirement system? Today we're going to talk with Joy Mukherjee, who is lead portfolio manager of small cap equity strategy at SWIB. Joy will help explain a little more the differences between large cap and small cap stocks. We'll also share some common misconceptions of small cap investments and how SWIB's portfolio has capitalized on opportunities that have had a positive impact on the WRS trust funds.
The SWIB podcast is a regular opportunity for you to learn more about the people and funds that comprise the Wisconsin retirement system. Please make sure to subscribe in your favorite podcast app so you don't miss an episode. Share this podcast with your fellow WRS members and leave a review on Apple Podcasts so it's easier for other members to find this show.
Joining us today is Joy Mukherjee, head of SWIB's U.S. Small Cap Equity Strategy. Joy joined SWIB as an analyst on the small cap team in late 2004. He was promoted to lead portfolio manager in 2012. He earned his bachelor's degree in electrical engineering from Rutgers University and his Master of Business Administration from The Ohio State University. Joy is also a chartered financial analyst charter holder. Joy, thanks for taking some time today to talk to us, and welcome to the SWIB podcast.
Thank you for having me.
Joy, really excited to meet you and make your acquaintance, learn a little bit from you here. But before we get too far into that, love it when we can have a Jack or Jill of all trades join us on this podcast. Certainly your background is perhaps divergent from a lot of other folks that you see there. I'm curious how someone with an electrical and electronics engineering degree ends up in the financial world, heading up a small cap portfolio.
So growing up, I always liked physics and math. So it seemed like a no-brainer to pursue a degree in engineering. And that's exactly what I did. Engineering taught me analytical skills. But I really found my true passion when I was working in the systems department of a brokerage house. There I learned about the world of investing. And as I learned about stocks and different businesses, I fell in love with stock analysis and with money management.
Well, it's awesome to hear, and certainly happy that you landed at SWIB. Tell us a little bit about the U.S. Small Cap Equity Strategy at SWIB and the team that's helping manage that portfolio.
So it's interesting. SWIB has run small cap money for decades. There was even a time I remember when we used to have two small cap portfolios. That did get consolidated into one, and I have been the lead portfolio manager since 2012. So the small caps AUM, or assets under management, is roughly about $3 billion today. There are 6 of us on the team. Each of us has a graduate degree or a CFA designation, and in most cases, it's both. So that's the team.
So before we get too far into the discussion today about the small cap strategy, let's do a little bit of investment 101. I offered some information about what small cap stocks are in the opening of the podcast. But can you give our listeners a general idea of what a small cap stock is and how it is different than a large cap stock?
Yes, for sure. So one way to categorize stocks is through their market cap. So market cap represents the total market value of a stock, and it's calculated by taking the number of shares times the price of the stock. A small cap stock is one where the total market value can range anywhere from $250 million at the low end to about $5 billion at the higher end. A large cap stock, on the other hand, usually has a market cap more than 15 billion. So these include companies like Apple, Amazon, and Google, where the market cap can actually go into the trillions. So I would describe the SWIB portfolio as more of a SMID cap, and that's a combination of small and mid cap stocks. The market value generally of our portfolio of stocks can range anywhere from 250 million to 15 billion.
So are small cap companies are they startups or brand new companies, or are they established businesses?
So small cap stocks can be brand new companies that have recently become public through a initial public offering or IPO. But for the most part, they are well-established businesses that have strong track records and solid financials. And unlike large cap stocks where the companies have already gone through tremendous growth, small cap companies, given where they are in the life cycle, can offer much greater growth.
Now, certainly that opportunity for continued growth or really, really exponential growth is one of the big advantages of investing in small cap portfolios here. But because these small cap stocks are of companies that are sort of in that growing process, is there also more risk involved in these types of investments than in large cap stocks?
So I would say, yes, of course, there can be risk and volatility, but that's probably true for any kind of investment. On average, probably the small cap stock tends to be a little more risky and volatile. However, for an institution like SWIB, the small cap asset class brings down overall risk because it brings more diversification to the investments that SWIB is making.
Now, when you're investing in large cap stocks, very often it's in brand names that you're familiar with, brands that are common discussion items around the dinner table or things that you hear about in the news. With small cap stocks, I would imagine that the brands are maybe not as well known. And so finding them certainly probably presents a challenge. But what are some of the other challenges to investing in small cap stocks?
Well, it's interesting. There are a few challenges for sure. For one, small cap stocks tend to have lower sell side coverage. And the sell side analysts are very good at writing reports that explain the business and bringing attention to individual names. For small cap, there may not be a whole lot of sell side coverage. So one really has to dig deeper to find attractive ideas.
When you talk about sell side coverage, that essentially means the information that's written about and available on these stocks?
Correct. And those generally come from the external brokers. So some of the other things I would mention is, small cap stocks have fewer shares outstanding than a large cap stock. So a large holder selling stock can move the stock price that may have nothing to do with the company's fundamentals. So that makes them a little more volatile than a large cap stock. And another thing would be for a larger portfolio like the one at SWIB, liquidity is important when we invest. You have to be careful not to move the stock price as you build a position. Similarly, if you want to get out of a position, you don't want to drop the stock price. So you have to be careful in how you do your trading.
Right. Now, for those of us that follow the stock market a lot more casually than someone like you, a lot of the headlines that we've seen, particularly over the last 4 or 5 years here, have had to do with these meme stocks, these stocks that have become popular on the internet, and the price has vacillated wildly all over the spot. Some of these meme stocks like GameStop or Koss Headphones is another one that we've heard of here in Wisconsin. Some of these meme stocks have been in the small cap universe of companies. What challenges did those stocks pose, and how has SWIB handled the stocks where the stock price appears completely divorced from fundamental or technical drivers of value and price?
So just to define a meme stock, it's generally a stock which has gained popularity among investors, often through social media. And for sure, they can be very challenging for the fundamental-based manager. We did have to deal with a few of them, and the ones that we had to deal with were GameStop and AMC. At the end of the day, we were unable to justify the valuation of these companies, and sentiment was what I would describe as being their biggest driver. The challenge comes because they can take up a lot of mind share for the people on the team because you're focused on them and they're creating havoc in the portfolio when you would be much better served by analyzing other companies that provide better upside over the long term.
Right. The idea there being essentially that if a stock gains a lot of value for simply no other reason besides its popularity, that it can lose that value just as quickly, right?
It absolutely can. The challenge is that you just don't know timing wise. And like I was describing, they can create havoc for the portfolio.
So, how do you and your team account for the risk and the volatility that comes with those types of investments?
So in general, to deal with volatility of small cap stocks, we do run a pretty well diversified portfolio. So we're constantly looking at risk exposures to adjust our positions so that no one stock or any particular risk factor becomes the major driving force behind the performance of the portfolio. So I also have a very talented pool of analysts on the team who try to identify quality businesses that have sustainable growth opportunities and strong balance sheets. And we also tend to take a longer term investment horizon. So this often means that we have to live through short-term fluctuations.
So we've talked a little bit about the disadvantages and some of the challenges investing in these stocks. Obviously, there have to be some advantages because SWIB has the small cap portfolio. What are some of the advantages of investing in small cap stocks?
So as I was mentioning before, they do help with the overall diversification and brings down risk for SWIB as a whole. There are also times when small cap stocks are the best performers in the market. In fact, we just saw this in this third quarter of this year when the small cap index, the Russell 2000, did much better than the S&P 500. And I would say in general, small caps probably do a little bit better when the interest rates are coming down. I also mentioned that, we have less sell side coverage. So that can actually be an advantage because it provides the team with the opportunity to discover some hidden gems. Finally, I would say that we can also participate in IPOs and get on the ground floor with a stock, and then also benefit from M&A. So larger companies are usually looking to acquire companies, and the acquisition targets are generally in my space, in the small cap space.
Now, one thing that you said there, Joy, is that small cap stocks typically do better when interest rates are coming down. Certainly, it's been in the news over the last quarter here that the Federal Reserve has cut interest rates for the first time in a while. Does that have any impact on the small cap stock performance that we've seen so far here? And do small cap stocks have any type of advantage right now?
So I believe it does. Like I was mentioning, in the third quarter, we did see small caps outperform. So on the whole, small cap stocks tend to carry more debt than the larger cap ones. So a drop in rates definitely helps them. The other way it helps small cap stocks is larger companies can borrow at a lower rate and buy some of these small cap companies.
Okay, very interesting. So on the converse side of that, then, are small cap companies more sensitive to the sorts of economic cycles that we see the market go through in a given decade?
So in general, I would say that probably is true. And since we focus more on the US and small cap companies tend to be more US centric, the US economic cycle matters more.
So SWIB is a long-term investor. Is small cap good for the long term?
Oh, absolutely. Small cap stock with solid fundamentals and a good management team will likely do very well over the long term. Also, as a long-term investor, I think the small cap portfolio fits perfectly with our overall investment strategy for the WRS trust funds.
And just out of curiosity, what happens when a company goes from small cap to large cap? You hold it in your portfolio as a small cap, and then it kind of transitions to that large cap. Does it transition portfolios then within SWIB?
So as far as the small cap team is concerned, if it gets to a certain market cap threshold, we will sell the stock.
I would hope that as a team, you maybe have a little pizza party or take a moment to celebrate the growth of that stock. It's almost like seeing a kid graduate from high school, right?
Absolutely is. Yeah.
I mean, really, though, like there's got to be a moment when you look at it and you say, hey, we did good on this one. Let's take a moment and pat ourselves on the back.
Yeah, absolutely. So we get a takeout. We are thrilled beyond belief. The whole team is very thrilled.
Joy, can you share an example of a company that you may have invested in that started as a small cap stock and then grew into a large cap? Maybe one of those victories?
So I can think of a few, yeah. So one that we had a large position in was a company called Monolithic Power, and it's a semiconductor company that served several end markets. The management team executed on their business strategy really, really well. They gained market share over time and found new markets to expand into. So we had invested in Monolithic Power when it was sub $2 billion. We sold it when it no longer fit our threshold. And currently Monolithic Power is around a $30 billion stock. So others that we've held also that have gone into the S&P 500 would include things like RFID leader Zebra Technologies. There's water heater company A.O. Smith, financial services company Raymond James. And those are just a few of the names.
Creating incredible returns on behalf of the members of the Wisconsin retirement system. I mean, that's good for everybody involved in the system here. Joy, I'm dying to know, what does your benchmark look like? How many companies are you and your team sifting through?
So the benchmark is something called the MSCI USA Small Cap Index. There are roughly 1,800 stocks in our benchmark. It does reconstitute every quarter, which means that the larger market cap names leave the index and smaller ones come in.
How do you and the team kind of tackle such a large universe? Like, can you walk us through the process for determining which companies to invest in?
So we follow a divide and conquer strategy. The benchmark names get divided up between the six of us. I myself cover tech hardware and semiconductor names, as well as parts of the industrial sector. So at the end of the day, we're looking for names that can outperform the benchmark. So we study company filings, we go to conferences, meet with management teams, talk to the sell side, build financial models, and then also use the macro environment as a guide to tell us where we want to invest.
I've got to say, with just 6 people tackling such a large index of stocks there, that's a lot of due diligence to have to do on all of those individual stocks. Is that why your team just focuses on U.S. small cap stocks? And what do we do about the international small cap investment opportunities that are out there as well?
Right, Dusty. We definitely use up all our resources focusing on the US, but SWIB definitely invests in international small cap. For now, that area is outsourced.
Outsourced how?
So we have a team within SWIB that hires external managers for international small cap.
And then the big question, I guess, how have small cap stocks performed against large cap stocks? Does one perform better than the other?
I would say it depends. So small cap and large cap stocks both have their moments. The performance has varied over time. Large cap stocks performed very well during the tech bubble of the 1990s. That all changed when the tech bubble burst, which led to small caps outperforming. So in the last few years, large cap has done very well. But I think as interest rates come down, I would think small caps will again have their day.
And where are the portfolios performing right now? Can you give us an idea of what this year looks like and then maybe what the longer term returns look like?
Absolutely. So I do have official returns as of September 30th of this year. Year to date, the portfolio was up 14.9%. For the 5-year, we were up 10.8%. For the 10-year, we were up 10.5%. And I'm really happy to say that in each case, we've outperformed the benchmark.
Well, those are great numbers to hear, Joy, and certainly exciting times for your team here as you continue to generate returns on behalf of members of the Wisconsin retirement system. This has been a great discussion, Joy. We appreciate your taking the time to join us here on the podcast, and hope you have a good rest of your week and rest of the year.
Thank you so much. I really appreciate it.
And thank you to all our listeners for checking out this episode of the SWIB podcast.
The SWIB podcast is brought to you by the State of Wisconsin Investment Board, with editing by Matt Covarrubias and produced by PodCamp Media. Branded podcast production for businesses, podcampmedia.com.
Thanks again for listening. I'm Chris Preisler.
And I'm Dusty Weiss.